Zoom or a similar Zoom, maybe 4 months, 3, 4 months ago or something like that. And I've got a better sense of what's happening. But the water deductible issue, which you guys are familiar with, and I'll explain what that is, I've seen it cropping up a lot more recently as we get these condominium deck pages in. So this is what I think is happening, and this is a little bit speculation, but everyone knows that interest rates have been going up across the country, in Georgia a lot. I mean, I say interest rates, I mean insurance rates. So homeowners insurance has been rising and rising and rising, and the HOAs are under tremendous pressure to keep the HOA dues to their members as low as they can possibly be. And so I think that they started collaborating with their insurance agents saying, what can we do? These dues are way too high. There's no way we can have our HOA dues go from 375 to 425. Everybody's going to flip out. What can we do to get the insurance down? And the insurance companies, for whatever reason, said, hey, our number one area of liability, probably the thing that costs them the most money, is water damage issues. So if they had a water deductible of $25,000 per unit, that would defray a lot of their costs. Because if you imagine a condo building, maybe it's a tall condo building and there's a water leak and it leaks down to the 4 units below it, that's $125,000 that those, 25, if the water deductible is $25,000 per unit, that means that each of those units has to pay the first $25,000 of any damage to their condo unit. I don't think the HOAs understood that they were really just pushing the liability onto the individual condominium owners, but that's what this does. That's what a per unit deductible does. So if those owners don't then go out and get specific coverage to cover themselves, then they're stuck with that hit. But what it does is because that liability comes off the HOA to pay, their premiums come down. And so as they're brainstorming ways to get it down, I think the insurance company said, hey, let's do this. The HOAs, without necessarily understanding exactly what they were doing, said, yeah, let's do that. Look, we've kept our premium, our master insurance policy premium low, and we don't have to raise dues very much. But they also did something else they didn't realize they were doing, which is going outside of Fannie Mae and Freddie Mac's guidelines for what's allowed. And so when that happens, which we're seeing more and more and more of, when that happens, there's really only three options that I can think of. Somebody can come in and buy the property cash, which, that's a pretty small margin, especially in some of these condo complexes. There's not as many cash buyers as you might want. You can get what's called, and Carrie, what's the terminology? It's not an FHA spot approval. They call it a
single unit approval. It's like the old spot approval.
Yeah, we used to call it spot approval, but you can get an FHA single unit approval, assuming that the condominium complex isn't FHA approved. Most are not, but you can get a single unit approval from FHA, but it takes time. 30 to 45 days, I think, is about standard, and you've got to have a seller that's willing to wait. Or somebody could do an unwarrantable condo loan, and those rates are quite expensive, and most people don't want to do that. But that's essentially what the HOAs, without realizing it, have done, is they've created an unwarrantable condominium now, and so you can't get conventional financing. So that's the problem everyone's running into. I'm not going to go into a whole lot of detail. We do have a workaround that works. Sometimes it's touch and go, but we can still close conventional in some of these complexes. So call us if you run into a situation with one of your listings or with a buyer that really wants to buy. But it's just important that you guys are explaining, that you first understand what's happening and why it's happening. It's the search for lower deductibles or lower condo policies is what everyone's looking for. And but we're seeing it on a lot more complexes. So Fannie Mae and Freddie Mac have actually started an approved list that only lenders can get to and see, but they've got an approval process that they do for these complexes. And Fannie Mae is light years ahead of Freddie Mac in this list. Fannie Mae's list is much more robust and much more built out. And my understanding is the way that these lists get updated is by lenders. Lenders actually go in and make a report to Fannie Mae. And as a general rule, most smaller lenders aren't necessarily super diligent about going in and updating. They go to try to get a condominium complex approved. They can't get it approved and they just move on. They don't necessarily think, I'm going to go back to Fannie Mae's website and update what happened. But some of them are doing this. Some of them are doing it out of spite, but so that other lenders can't close in there. But and I'll show you guys all this in just a moment, but that's kind of what's happening. So there's this list that's either approved, no status, or denied. Those are your three options that you could have on for condominiums in the Fannie Mae thing. So first, let me show you what the statuses look like. I'm going to share my screen here as soon as I get it ready. And I'm just, so you guys can see a graphic of what this actually looks like when we go in to check it. Let's see, that's the one I want to share. Hopefully you guys can see that. So
I don't see it yet, Mark, but when, while you're getting that up, Fannie Mae is also doing something, that I heard. It's not just the lenders with Fannie Mae, which is why their list has gotten so robust. They're doing a really good job at auditing their files post-closing and taking the condo documents and reviewing them and putting the information in the system, which is why their system has gotten so big. And there's so many approvals in their system, which is so great to see.
Yeah, that's good. So anyway, hopefully you guys can see my screen. So this particular one is one we checked down and there's no Fannie Mae review. So this one, obviously there's no data on this one particular condominium. This one, which should be coming up in a second if my computer will load. Nope. Gotta love technology when it works. Anyway, you guys, let's see, what is that one? Anyway, one of them says approved and the other one is just going to say no status. So if I could get them to load, it would be lovely. This is what the condo property insurance certificates look like. And I'm going to go through this kind of quickly. But if you've got questions, you can put them in the chat, or at the end, I will open this up to all your questions on this subject. But when we, and you can always send these to us and we will check these down for you. If you want to know either a listing is coming up or you've got a buyer that's wanting to buy in a complex and you want to know if it's going to be a problem. So in this particular complex, which was Pratt Stacks condominium, and this is old, so this is back from February, but same thing applies. What we're looking for is, first off, this section right here, which is the limits, the condo limits. So this building has a total limit of $33 million in change. That's their condo limits. The first deductible that you have is basically a 5% of that deductible, which is 1.657 million. And what that says is that no single occurrence for the whole complex, you can't have a deductible that exceeds 1.6 million. We never run into a problem for this one. So this one is somewhat irrelevant. But the reason I show it to you is this is how you figure out what Fannie Mae's accepted per unit water deductible would be. You would take that 5% number and you would divide it by the number of units in the complex. So if we scroll down to page 2, this is where they show how many units. They didn't actually list a total, but we added them up and it's 128 units. So if you take the policy coverage, the total building coverage, take 5% of that, you get a number, and divide it by the number of units. What you get is $12,946.62. That is the maximum per unit deductible that you could have and still be in compliance. Well, this particular complex has a $10,000 per unit water deductible. This complex is in compliance. It's not a problem with Fannie Mae as of the date of this policy, which is back in February. So this wouldn't be an issue. So that's one example. The next example I want to show you guys real quick is another one. 16 million is the limit. 5% of that is the 827,424. And there is no per unit deductibles in this complex. This is Virginia Hills Condo Association, another one we reviewed. So this one doesn't have a per unit water deductible at all, and it's not a problem. So this is just Fannie Mae, Freddie Mac lending as usual. And then this last one is the Brookwood, again, back in February. So under the total building coverage, they had guaranteed replacement coverage, which you have to go down into the notes and you'll see it says guaranteed replacement coverage rateable limit is 151,825,000. So that's the actual limit that you start with. You take 5% of that, you come up with 7.5 million, and there's 222 units in this complex. That means the max water deductible is this $34,194. If you look over here, their water deductible is 50,000 per unit. It is out of compliance because it's over. So again, you guys don't necessarily have to learn to do all that math and to figure out, but I just wanted to give you an idea of that's what we're looking at to determine whether they're in compliance or not. but I've seen many, many more of these in the last 2 months. The other reason that you're getting more pushback, a lot of lenders were not really paying attention to this water deductible issue at the first part of the year. And they were going ahead and closing these loans conventional because it's up to the lender to verify that it meets all the Fannie Mae, Freddie Mac guidelines. So earlier in the year, a lot of lenders were just closing these and not really checking down the per unit deductible because it hadn't really been an issue before the last 6 to 8 months. Well, then they started getting buybacks from Fannie Mae where they said, hey, you did this loan Fannie Mae, but it doesn't meet Fannie Mae requirements. You're now buying the loan back. And it doesn't take very many times for lenders having to buy loans back that they very quickly get very, very strict and they check every single policy, which is what's happening now with all the declines you're getting, is because lenders are being very, very specific to check this kind of thing down. So hopefully that is we're right at 15 minutes and I wanted to keep it to 15. That's an overview of what's going on. Hopefully that brings to light what's happening. I think it's going to have to write itself at some point, the HOAs, and we have an email template that we've set up for agents that we can send to you. You can fill in your information that you could send to an HOA, explaining to them what's going on and why they might want to reconsider doing this. Some of them, say, oh my goodness, this is a big problem. We need to meet and figure this out. And some of them have gotten very defiant, saying Fannie Mae can't tell us what to do with our deductibles. And they're right. Fannie Mae can't. They just won't lend in your complex, which means that your market share has just gone very small. Unless you have a cash buyer, someone that can do an FHA one-time approval, or someone that's willing to pay for an unwarrantable condo loan, you basically are going to have a lot of units sitting on the market. I think it's important to share with your buyers that are looking for condos what's happening too, because my concern is, yes, we have a workaround that in some cases will work and make, we closed 2 last week. We got another one closing this week, that gets around this water issue temporarily. But if they buy in the complex and then turn around and have to sell a year later, I don't know that we'll still have this workaround. It could go away at any moment, but right now we have it. And as far as I know, we're the only lender that does. It was an agreement with Fannie Mae that Fairway made years ago. And so we're able to still close on these for the time being, but that could be rescinded at any point. I should also mention, when I showed you the Fannie Mae, I tried to show you all 3 Fannie Mae statuses, but I showed you the no status. There's 2 others. One says approved and one says withdrawn or declined. Basically, we can't close. If it's in declined Fannie Mae status, our workaround does not work. So it has to be either approved or no status to work. And the trick of it is, if the status changes while we're in process on the loan, we don't have a loan when we get, if the status happens to change while we're going through the process. So, we just have to we're very upfront about that with anyone that wants to use that to get it closed, but we definitely have the ability to do it for now. So I'll open up. If you guys have any questions, you can just raise your hand or throw it in the chat or unmute yourself and just start talking, whatever works. Go ahead, Bill.
So if the Fannie Mae's number is 5%, then that's a fixed number.
Say again.
If 5% is something that Fannie Mae comes up with.
Talking about where you take the total thing and you come up
with
yeah, that's a Fannie Mae, Freddie Mac. And I keep saying Fannie Mae, but it's just all conventional loans, whether Fannie Mae or Freddie Mac. It's 5%. And that is the first level. That means that if you can't have a deductible that's higher than that, like if half the building burns down, you can't have a deductible to replace that building that's over that amount, the 5% amount. So that's what it's, or if there's a massive water leak that hits you can't have a deductible higher than 5% of your total policy coverage. Again, I've never seen one that's that high. For the complex wide deductible. It's the per unit that's getting everybody. Any more questions? Go ahead, Beth.
Where do I find the list of denied condominiums?
Unfortunately, it's only available to lenders, so we would have to go in and check it for you, or another lender could do it as well. But we're happy to do that. So if you just shoot us an email, we need the name of the complex and the address of the unit are the 2 things that will help us the most. If you just send that to us, then we can go look it up for you and let you know.
Thank you.
Any other questions from anyone? Awesome. Thanks so much for joining, everyone. And we'll
Hold up.
One second.
Thank
Looks like
you.
Ashley Heath has said two questions in the chat just popped in.
Okay, hang on, let me look at them. That's what it is. Ashley, to answer that, so what Ashley said, for those of you, it says one lender told me that HOAs that have this issue can get some sort of endorsement on their policy that somehow makes it okay for them for conventional. Are you familiar with this? It was in passing, so I don't remember the total. There is some language that we're starting to see appear that would possibly solve this issue. It's up to the lender to determine if that language is going to be in line with their risk appetite, I guess is what you'd say. But I think it's good. I mean, obviously this is going to work itself out. This is a temporary problem. There's no way that the condo association can continue not to have conventional lending. So it's going to get figured out either with getting rid of the water deductibles or changing the way the policies are written or something. So I think there's a lot of things being tested right now, Ashley. But we have seen some language changes that have made that we believe are acceptable to Fannie Mae and Freddie Mac. We haven't heard from Fannie Freddie that they're actually acceptable at this point. Does that answer your question, Ashley? I don't know if you want to unmute or just type in the chat, but hopefully that answers your question. Any other questions from anyone? Thanks for catching that, Daisha. All right, thanks everybody. It's not letting you unmute, so weird. Thanks everybody. Have a good day.